way.
Okay. Let's bring in Peter McGuire, CEO of XM Group, for his insights. Peter, warm welcome to the program. Really appreciate you joining us. What are your thoughts on the big move in gold at the moment? It's not only gold, I mean silver as well, sort of both running pretty hot. Is there further to go? What are you making of the moves?
Well, good afternoon, Leanne and Mark and Steve. Look, it's had a wonderful run up over the last couple of weeks, and what we saw, that silver market, Leanne, up 7% in the last 36 hours of trade. So that's very, very strong. I think it'll probably plateau out a little bit. I'd say it's getting to a point that it's had such a strong uptick in the last month. We're up from $16 to about $21, so that shows about 25, 26%. Very, very solid for silver. And when you look at the gold market sitting at that 1350, 1355 sort of handle, I think there's a little bit more momentum there. I wouldn't be surprised to take 1380 out sometime in the next week and a half.
And why, I mean, what's the basis for this rise? Is it being triggered by expectations of more stimulus sort of coming from those central banks, notably the ECB and the BOJ? I guess on top of that, the Fed raising rates this year and everyone weighing in on that. Is that sort of what's driving those moves?
Well, I think they're the two major points.
Yeah.
And, of course, a little bit further weakness as far as that US dollar's concerned. What's happening globally, and is the Brexit just the start of a contagion that may wrap itself across over the summer period? Certainly a lot of uneasiness across the Eurozone. So I think that all goes into the melting pot, Leanne, to try and, push it higher. And it's certainly working at the moment.
Peter, Steve Johnson here from Forager.
Hey, Steve.
How are you?
Good, thank you.
Just in terms of that dynamic or the correlation that we've seen so high over the past few years across equities, across currencies and across commodities. I know you said that there's weakness in the US dollar driving it, but there does seem to have been a bit of a break there over the past month or so where we've seen some commodities trading higher despite, a relatively strong US dollar. Do you think that there's something at the fundamental level that's going on there rather than financial trading in these commodities?
Well, from a fundamental side, when you look at the mine production, the likes of the base metals and zinc and nickel and tin and lead and aluminium, certainly they have their own issues. Then you roll that across to the iron ore space. If you look at what's happening as far as Mother Nature, and you've got certain conditions affecting global wheat production, soybeans, corn and so on, that all goes into its own scenarios. And then, of course, roll that across to the energy market, and what we've seen over that, Steve, in the last matter of a week or so has been dramatic. It's up around about 500 or 600 cents of movement. We've had very solid uptick since Brexit from that 45. Then we've had it sell off a little bit. So, there's plenty of movement out there, and it just seems to be, that just shows us the sheer volatility across all of the sector.
And even in that coal space as well, I shouldn't admit to this, but sold my Whitehaven coal shares at 78 not too long ago, and I saw them hitting highs of 120 today.
Ooh, that's
hurts,
up
from
50%.
Well, we bought them for 38, so we thought we'd done very well. But
very nice.
38 cents in January, and you've got a stock price there of $1.20 today, 6 months later.
Yeah.
Is coal just being dragged along with everything? There's nothing in the fundamentals there that get me excited.
Well, sometimes it shows that herd mentality, and also it was probably oversold at 38 or whatever it hit on the downside. And that just shows that, these markets can be ahead of themselves or behind themselves, and when they do gallop, as example with that Whitehaven, certainly did gallop and gallop strongly.
Pete, Mark Todd here from the NAB.
Mark.
How are you?
Good, thank you.
Volumes. Tell me about that. Is it, because some of these things, I feel that post-Brexit, a lot of people have just said, I'm not a seller, move out. What's happening in things like gold? Has there been a lot of turnover, or is it starting to gap out as people try and chase it?
Well, we had the big boys enter it, the Hedgies and, the Paulsons and so on, and they were right behind it, of course, Soros. Some of them got the moves right, but a lot of them did anticipate that you're going to see volatility, and that was demonstrated with these big upticks, up around about 100 odd bucks. So, a lot of the big, the funds, you had the SBDR Trust Index and so on. They're really buying, and all of this has underpinned the price. Again, Mark, nervousness, and it just goes into the big wash, and it's just shown us where the market is. And, you put your mind across to that silver market up 25 or 26% in a month. That just demonstrates, I don't think the industrial demand's there. I just think it's, simply it was oversold.
Is it something you see central banks selling into? Do you think that you start to see those organisations saying, OK, hang on, let's try and get rid of some of our gold?
Not necessarily. I mean, if you look at the Great British Pound, You had 700, 720 for a ounce, pounds that is, and we're now through 1,000. I think it's 1,020. That's all happened in the last matter of months. At the start of the year, I think we're at 710 or so. So that just shows you 40% up in pound for the price of gold, or 45% in that 20-week period. So I don't necessarily think that the banks are selling or the sovereign wealth or so on. I think there's more buyers than sellers at the moment.
What do you make of the moves in iron ore? Because I'm interested in this. Despite all of this turmoil and uncertainty, we've just been seeing iron ore on the move upwards. What do you make of that? I mean, is that all around expectations coming out of China and more stimulus there as well?
Well, I think so, Leanne, and I think the other side, of course, is that it probably, like it was demonstrated, that was oversold. So as it hit those very, very low numbers, certainly a lot of buying went in, and now you've just seen it just have an uptick, and it's been very, very nice over the last week or so. I think it'll probably continue for a little while, but it just shows you the lumpiness and, of course, again, that wonderful word in commodities, volatility. So, the China economy, they've got to add stimulus and keep it going, and that's just, demonstrated with that barometer being iron ore.
I think the other big factor here, particularly in equities prices, is the hedge fund role in the market. It was the trade of 2015 was to be short commodities and long absolutely everything else. And all these market neutral funds out there were in that space. And I think as that has reversed, it was a very, very crowded trade. Now you've got a lot of people that are showing bad returns for the first 3 or 4 months of this year and saying, well, I just can't sit on that position anymore, and are having to buy stocks as they run up and the liquidity is just not there. So I think the hedge fund money, and you're seeing a lot of pain in that space this year because that trade has really reversed in a big way.
Exactly right. In the emerging markets, we've seen, quite strong numbers there, and that will continue. Many analysts are saying over the next, 12 to 18 months, that's a place to be. Next week I'm in India, and I'm sure that, that economy, and you look at, Southeast Asia, it certainly is booming, and they've just got the right ingredients with people, population, and of course, an appetite.
What about the stocks specifically, the iron ore players? I mean, Fortescue breaking out yesterday, its highest close since 2014. What's sort of playing out here?
Well, I think again, Leanne, you've obviously, in a lot of people's eyes, it was oversold, and they're just seeing that more momentum. The big boys are rushing into it, and, volumes are quite healthy. And the other side, of course, is that once it gets a move on, and that's been demonstrated in the highest in 2 years, that just shows you there's dollars to be made, and it might turn into another Whitehaven.
And look,
is
this
that
is
the
one of
point
the
that
most...
Steve's making? Is that what's happening with around the hedge fund world? Because the hedge funds have really built it. I mean, a lot of people are very unhappy with the performance of the hedge funds. And Is that what's happening here? You've got short Fortescue. Everyone wanted to be short.
This was one of the most shorted stocks on the market 6 months ago, right? And people thought it was going bust, and now you get a 30 or 40% run up, and everyone starts to panic and has to buy the stock. So
well, exactly
it
right.
looks
the shorts get squeezed, and that's what happened. And now have a look at it, and it's bounced. And it's bounced strongly. And, that was obviously on the other side of it, the energy market was just absolutely annihilated, as we all know. And then that bounced from its 26, 27 buck, and now at, 47, 48. So that's brought them all up as well, iron ore, and it just goes into the mix.
What about the big guys? I know Mike has a question. I'll just throw mine in first. BHP and Rio. I mean, that news today with BHP sort of expanding their Escondida copper mine there, the biggest copper mine in the world.
You bet.
I mean, is that a sign that they are sort of shifting their focus away from iron ore into some of those other commodities?
Well, I don't necessarily think so, Liam, but the other side, of course, is most of these companies, if you look at, not only the miners, but of course the oil exploration companies, and take Shell, for example, a lot of them just trimmed head count. That's how they got those numbers and dividend. And so that was really, to satisfy shareholders, they trimmed everything back, cut down CapEx, and, they've spent big dollars over the last few years leading up to that point. So it's probably just a rebound. This is what happens. And then markets get I put my mind back to BHP. I used to trade at 30 to 35, 40. It hit 49 there over the last few years, and then it, collapsed to 16. So that just demonstrates to Main Street what sort of moves are in these markets.
I guess the big miners are ripe, Steve, for more M&A, sort of if the right assets do come along.
Well, exactly right. I mean, you think of the Saudi Aramcos, you think of the big boys out there, and it's far easier instead of going to greenfield sites and trying to make sure that you've got something in the ground, it's better to buy existing or buy opportunity, and that, it's probably better in some ways than money in the bank, because it guarantees over the long run that you've got supply, and I'm sure that demand, that's not going away.
Pete, you mentioned oil. Do you think it stabilises around this number? Is it around these mid-40s? So it's had that rally back up. There's a cap at 55, 60 or whatever it might be, but there's also a base at the 40. Do you think it just sort of becomes part of the noise, but it's not as, the implications aren't as severe? Well,
exactly, Mark. I mean, the only way that it's going to run out of, either band between that, 40 to, say, 55, to go either side, something dramatic's got to happen. And if you don't see any geopolitics, if you don't see weather outages as far as hurricane, and we're coming into that now, by the way, that's the start of the season from about, the middle of this month, then if it's a quietish year, then I'm not convinced that you're going to see oil above, 53, 54. I think it's going to have a handbrake around that number. But if you have some issues, and sometimes that can affect the market quickly, weather outages, geopolitics, that can, spike a price, and you've also got the underlying, the US dollar where that trades.
All right, Peter McGuire, we're going to leave it there. Really appreciate your insights. Thank you.